A very warm welcome to you. I'm Angeline Ong, and welcome to this new edition of Beat the Street. Not long before Wall Street starts trading, let's get you across some of the biggest headlines ahead of the Wall Street Open. CPI on deck, investors eyeing that inflation reading for clues on Fed rate cut timing schedules. And Bitcoin ETFs in focus. The SEC has given Bitcoin ETFs the green light. But what does this all mean for investors? And Google's restructuring. The search giant is cutting hundreds of jobs in assistant engineering and its hardware teams. All of that in just a moment. Welcome to this new edition of Beat the Street. As I mentioned earlier, Wall Street will start trading very soon. But first, we've got that CPI figure just trickling through as we speak right now. Just giving you the headline figures. We've got core CPI month on month. This is a month on month figure rather for December. We were expecting 0.2%. We got 0.3%, slightly higher than expected. In terms of the core, bang in line with expectations, 0.3%. And in terms of the CPI index, what we're getting here, we were expecting 306.61. We got 306.74. So pretty much in line with expectations. Slightly higher on the year-on-year figure for core CPI. Let's have a look at the markets to see whether there's any instant reaction. The US 500, which mirrors the S&P 500. Let's take a look at that first. It was 4794. It has come down ever so slightly since then. Let's have a look at Wall Street, which mirrors the Dow Jones Industrials. A similar picture there as well. Let's have a view of the 1 minute picture. There you go. There you can see the reaction there. It is coming down now after that CPI figure. And also let's have a check on the Tech 100 as well to see if we have a similar trend in place. And we do. The NASDAQ, Dow Jones Industrials, and the S&P 500 to a certain extent coming off after that CPI figure. And just a quick check on volatility for you in terms of a daily view. That's the hourly view first. Volatility is still quite low there. And if I give you the daily view, you'll see as well that it's still stuck at around the 14.12 position. So not much of a change there. One other key indicator that I want to highlight as well that we were waiting on is the jobless claims number. This is for the 30th, week ending 30th of December. We were expecting 1.8. We got 1.8. So pretty much bang in line with expectations. Maybe slightly lower, but pretty much in line with expectations. So just a quick recap for you. It's been quite an interesting sort of reaction there to this CPI figure. Let's perhaps cross live now to Chris Beauchamp, if we may. Chris?
You may, yeah.
How are you finding the reaction, and any first thoughts on these figures?
Well, I think we knew that a lot of the expectations were skewed towards expecting a slightly stronger print. Market got very ahead of itself in terms of expectations. So if you look at the minute reaction, that immediate drop on euro dollar, and then back up again, we're sort of recouping about half the move. Inflation's still declining. It's a bit up on last month, but the general direction of travel, which is the important thing we're looking at here, is still moving in the right direction for the Fed. We're not at 2% yet, but we're heading the way the Fed wants it to. I don't think this really bolsters the case for March, like something that was overinflated, but certainly May, I think, is still very much on the calendar. It's just that maybe the market was too eager over the past couple of months, really.
Does this suggest that the Fed is perhaps able to create this soft landing that everyone's been talking about? I mean, the expectation for the timing of the rate cut seems to be widening between what the Fed is suggesting, what the market is expecting.
Yes, I think this is the problem really for markets, especially with equity markets. If you look at the US at record highs, if they're expecting the Fed to move in March, I suspect they will be disappointed. But talking about a soft landing, yes, I think the Fed can still do it if it wants to. That's clearly what the Fed wants to get. The question is, if they cut rates maybe in the second half of the year, will that be too late? Clearly, inflation is moving in the right direction. So maybe a small cut in May would send the kind of message. Remember, the expectation from the Fed is about 70, 75 basis points of cuts. The market's currently in pricing 140. So there's this big gap with expectations at the moment, and that's where the volatility for markets, I think, will come in this year.
Thanks very much, Chris Beauchamp there from IG. We'll check in with you a little later on that story, I'm sure, and also bank earnings. We're waiting on that as well in the coming session. But just swinging back to the US 500, which is slowly, as Chris mentioned earlier, it's slowly sort of coming back now after that initial reaction. It must be said as well that the index is still not too far away from its record closing high of 4796 hit in January 2022. Now, a quick check on Amazon and some of the mega caps as well after those numbers. Amazon, of course, trades all sessions. Similar there, sort of reflecting, mirroring what the indices are doing. Let's just have a look at the hourly picture for you. They are still holding on to gains pre-CPI data. Also looking at another big cap stock, which is NVIDIA for you. This is in the, of course, chip space. And as you can see there on the hourly chart, it's actually tipping into negative territory now. Let's have a look at the minute chart for you. There we go. A similar sort of trajectory there. Also want to check in on Lyft, which is all sessions on the IG platform, because prior to this, we had Goldman Sachs downgrading the ride-hailing platform stock to neutral from buy. Netflix, another one that we are watching for you because it's also all sessions on the IG platform. Let's have a look at a daily chart there. It is all sessions, by the way, and it's currently up 1.6%. Netflix there supported after it said that its ad-supported tier has reached more than 23 million active users per month globally. Now, as I mentioned earlier, one of the big stories that we're watching for you comes out of the Bitcoin space. The SEC has finally given Bitcoin ETFs the green light, as expected. Late on Wednesday, the US securities regulator approved 11 applications, including those from BlackRock, Fidelity, Invesco, and Van Eck. Most of these products are expected to start trading today. But what does this mean for Bitcoin trading? Well, ETFs offer investors exposure to Bitcoin without them directly holding it. And earlier this week, analysts from Standard Chartered and many others as well estimated that ETFs could draw $50 billion, $50 to $100 billion this year alone. As of Wednesday, Bitcoin, this is in terms of its market cap, stood at $913 billion. So what's next after this? Well, some regulatory experts say that other innovative crypto products might follow. And as from now on, what we could see is that it will be a lot harder for the SEC to say no. Also, another big story that we're watching for you is Boeing, because after the blowout malarkey, Alaska Airlines says it will cancel all 737 MAX 9 jets through Saturday. United Airlines, which uses 737 MAX 9 jets, sees significant cancellations on Thursday. And meanwhile, the FAA probe is, might I reiterate, this probe is still ongoing. So they don't quite know yet what exactly happened, but the probe is still ongoing. And there are a lot of cancellations in at least the next few days for those using these 737 MAX 9 jets. And just checking in on Google for you, because, or Alphabet rather, which is the parent company, because Google has announced job cuts. Now, the interesting thing is that it comes out from its engineering, its assistant space, and also this is the voice assistance unit, and jobs are also expected to go in the augmented reality team. Hundreds of roles in the search giant central engineering team are also being impacted. Now, a Google spokesperson said that throughout 2023, in the second half, A number of their teams made changes to become more efficient and to align their resources to their biggest product priorities. The spokesperson, though, did not specify the number of roles being addressed, and it's not clear yet how many people are part of the Google Assistant software and other teams. And checking in on Citigroup for you because it's we're on the cusp of the US earnings season, traditionally kicked off by the big banks, and Citigroup ahead of that. It's expected to book around $3.8 billion in combined charges and reserves. That is expected to cut its fourth quarter earnings. Of course, this is due out quite soon. This is according to a filing. Other banks that are reporting in the coming session include JP Morgan Chase, Bank of America, and Wells Fargo as well. Now, before we go, a quick look at how the market is looking. Here's a look at Wall Street for you, which mirrors the Dow Jones Industrials. What's probably a better picture for you is the hourly and the minute chart after those CPI figures. Let's see what's happened since that fall. And they have come back up quite a bit after that figure. What's also quite interesting in this space is that move is being mirrored elsewhere on the US Tech 100 as well. And it has to be said, all the moves hinge on what's going to happen next with the Fed, and potentially we are expecting some Federal Reserve officials to come out with comments in the coming session. So that will also feed into the mood music from the Fed and interest rate cuts. Well, that's it for this edition of Beat the Street, the show that follows all the trading action, helping you position yourself ahead of the opening bell. For more trading insight, do follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.